Okay, welcome back. Timothy Brown here, podcasting again. Today, we're just going to talk about the investment community, some of the things that I'm doing with my money, because I wrote about that a while ago, and people said, Tim, what should I do? I have had great exposure to the investment community over my career because of the things I do and the people I know, and I've had limited success. But in the last decade, I've really smartened up and done a lot better with what is intended to be my retirement savings. So here with me today is my good friend and my advisor, Michael McCloskey of Greenskeeper Asset Management, GCAM, GKAM as a short. I've known Mike over 20 years now for sure, maybe
Yeah.
25. And he's born and raised in Canadian. We are Canadian and we're not for sale, right? Hey, folks, did you see
We're
these? Doug Ford wore one of these, so I ordered them and they arrived today. So, Mike, I just wanted to say to my followers, and I don't have that many, but most of the people that I talk to are professionals. They're making above average income. I don't like the investment community. I like you, man, but I don't like the
Thank
investment
you.
advisor community at all. So what do you say to that?
Well, there's good and bad. I think there are good advisors in the industry and others that are not as good. In my experience, one thing that I think surprised a lot of Canadians is that many investment advisors are actually not fiduciaries, where they don't have to, by law or practice, look after your best interest. And so I think that leads to some bad practices in the industry where they're selling products with high fees that maximize their own returns. Um, in addition, a lot of investment advisors are not portfolio managers. So they're going to rely on their research departments for stock ideas and not necessarily do the work themselves. And I've been on the sell side. It's the bank-owned dealers. That's called the sell side. And there are a lot of incentives in that business. You don't want to upset issuers, so you don't want to say sell
Yeah.
a stock. You want to say, well, that's a hold, or a market perform. So you got to really understand the incentives in that business and what research really means. And I think a lot of that would just go away, Tim. Like you've mentioned to me in the past, you've had bad experience with people in the industry. There are some good people doing good work, but it's hard to figure out who's who. And so, one of the things I'd say is look for portfolio managers, people that have a fiduciary obligation. You can check out people's registration for sure, make sure that they haven't had any regulatory issues in their history. But the other thing, like when I founded my firm about 14 years ago, one of the things that I did, I think that would make a lot of the problems in the industry go away. Put your own money alongside your clients. If you invest in the same things that you're putting your clients into, I
Mhm.
think that deals with 90% of all the bad things
Right.
that happen in the industry.
Okay,
When I
so
started the firm, my first clients were my mom, my dad, my brother, and my sister. And they haven't taken a dime out in 14 years. So like when you're managing your own money and your family's money, the same way that you're managing your client's money, it doesn't guarantee that I'm going to do a good job, but it guarantees that I'm going to take it seriously
yeah.
and try and do things that are in their best interest. So I've tried with our firm to just align interest and make sure that we're doing things that are good for us and good for our clients. And there are advisors out there like that, but unfortunately, not as many as there should be.
I know that you openly disclose, when we get our quarterly reports from you, we get monthly reports, quarterly, annual, but you often say, the large majority of my family's personal net worth is in this fund, and your money's right beside my children's money, and my grandkids' money's in there. So I like that. I like that a lot.
So
That gives me great comfort.
it's 100% of my wife and I's portfolio, and it's about 75% of our personal net worth
Is right
on the
there
line.
beside my money, dollar for dollar. You've probably got more
Correct.
than I do, but my money's riding on your coattails. I'm
Yeah.
fine
So
with that. Hey, look, how do we lay people, if I want to know that somebody is a fiduciary, how do I ask them that, or how do I test that? Prove that.
You, yeah, you can look it up. You can look at it online. Like for people in Ontario, for example, you can look at used to be called IROC. Now it's CIRO. CIRO is the regulatory body. Or for people that are regulated by the Ontario Securities Commission, like my firm, you can look up our credentials. And really, you're looking for they call it an associate advising rep, or sorry, an advising rep or a portfolio manager. Portfolio managers have fiduciary obligations, so that's part
You
of
are
it.
both. I mean, you're a fiduciary and you decide what goes in and out of this portfolio. You're not being
I have full
directed by
discretion.
some,
Correct.
yeah, you don't have some big research team that says, okay, the fund's now going to go 6% into this or 2.5% into that. You are making those decisions for the Greenskeeper portfolio, and your family money's in it, and you're a fiduciary. So all of those things are passing the sniff test of, can I trust this person? Now, folks, I've known Mike I think I've known you over 25 years. I think I put
Yeah,
money in with
probably.
you shortly after you started.
You
What am I,
did.
12, 13 years in with you?
Yeah, about
Yeah.
that.
And it's doing well, of course. I wouldn't be here promoting and recommending. You said something earlier about, the stock pushers. And I'm going to call them stock pushers. And I would think I saw some article some time ago that the large majority of these people that are financial planners, financial advisors, certified financial this and that, there's too many designations in the industry, but the large majority of them aren't even invested in the things they're promoting. And if they did, somebody did a net worth test on that industry at large, and I don't know how they glean that data. Most of them are broke.
Yeah, I don't know. I haven't seen that data, but I would say that a lot of investment advisors, there's two roles in this business. One is gathering assets and one is managing the money. I think the majority of investment advisors are asset gatherers,
They're
and
gathers.
they're gonna defer to the rest of their corporate entity to create portfolio allocation, and that's not how we do it. We're value investors. I just go to some of the best investors that have ever lived: Charlie Munger, Warren Buffett.
Yeah.
We try and do what they taught. I'm not going to read a research report and make an investment. We do our own work here on the buy side. And so we go deep. I try and find 15 to 20 of our best ideas, and I don't trade. We believe in long-term compounding, and I just try and follow what the best in the industry have done. And it's surprising that how few people actually do that in this industry. And part of it is temperament. To be a value investor, you got to be comfortable going against the grain. And I don't really care if someone else is trading every day or talking about Bitcoin or some of this nonsense that's out there. I want to invest in great cash flow generating businesses that we're going to earn an attractive return on over the long term. And so we just stick to basics. We keep it really simple.
You're very elegant because I don't think you want to say too much more, but I'll say it for the layperson. These stock pushers and these takers, they're asset gatherers, and the assets they're gathering is our money, folks. They need to gather our money to open new accounts with them, to get us to transfer in from wherever the money comes from, and they get commissioned on bringing it in. They don't make hardly any, if any, money on how that asset actually performs. The firm makes a lot of that money. Now, there are differences here, and I'm probably speaking a little out of line, but the large majority of the people that are talking to you about investments and planning and structures and strategy are commissioned to get you to put your money in. They're not invested in a lot of these funds or portfolios. Most of them don't have two nickels to rub together, from what I can understand. And there is research on that. I wish I could citation it right now, and I did find it. So just be really careful about the pitches. And a lot of it will come from family and friends, and that's when it's really uncomfortable. That's very uncomfortable because they've decided they're working for this firm or that firm. If you had to summarize just like the very, very basic investment advice for people that, like me, I'm 61, I've been burned. I smartened up young enough and listened to people like you. And yes, I follow the Warren Buffett principle closely. And there's a number of disciples and people that have very, very similar strategies. You are one of them, Michael. What do you say to the average Joe like me making an above average income? What should we do?
Well, a couple things. My last quarterly newsletter, I talked about deferred gratification. So you really got to have a mindset. I'm going to put away a percentage of my income, and maybe you defer buying the new car for another year. You buy a slightly smaller house, because the longer you can put money away and compound it, it's incredible how big the numbers can grow to. So that's one, is you got to have that saving mindset. The second thing is when you're doing your due diligence on potential advisors, you should interview them, you should prepare questions, you should talk to other people that invest with them. But the biggest thing I'd look at is, the basics. You got to make sure they're registered and that they've got no past trouble with the regulator. What's their track record? Are they any good? And one of the things I pride myself on with our firm, I put our returns on our website, and we do it monthly.
Yeah.
And a lot of different people that you approach, you can't really tell how they've done, right? Like, they don't post the returns. Even as a client, I've seen statements from other dealers where it's not transparent.
I can't figure it out.
So
How
you're
much
not
did I
allowed
put
to.
in? What's it worth today?
Correct.
And what's the plus or minus either? It's always from inception, and I get that too. But
Correct.
how did I do in the last 12 months, please? I like annual computations, and some of these big firms they can't make it clear for me. And I know they just changed the legislation 2 or 3 years ago to force these people to make it more
Correct.
clear, and it's still not.
Well, so you, as a client, you consume what we send out. I try and make it really, really simple. Here's what you gave us. Here's where it is today.
Mhm.
Here's your compounded return. Here are the fees you paid us. And, if you give value to your client, treat them like grown-ups and do a good job, my business will grow. And so
Well,
almost all of our businesses come from referrals from people like you, Tim, where,
well, and I
and we've
do
just
refer to
focused on
you.
doing a good job.
I'm not a powerful referring source because I've never really been involved. I've stayed arm's length from the investment advisory world, and my age and my clientele following me, mostly being more mature like me, is dragging me, into this market of, what are you doing with your money, Tim? What do you think I should do, Tim? If I sell my practice and get $1 million, and I'm like, that's not my wheelhouse, but I do feel obligated to make some commentary on it. And as a matter of disclosure, folks, I have a fair bit of my money in an S&P 500 exchange traded fund,
Yeah.
which is the number one thing that the Wolf of Wall Street says, the real wolf, not the fake one. It's the number one thing that Charlie Munger and Warren Buffett have always said, and many, many other people. So that is very simple advice that anyone can follow. You open a self-directed account, you buy an S&P 500 exchange traded fund. I buy in US dollars, and you set it and forget it. Or if you're going to go to the managed money side, which is what Michael McCloskey and Greenskeeper are in, look for fiduciaries, look for portfolio managers who are structuring and deciding on the portfolio. And I would strongly recommend you look for someone who has their family money in it and that they can prove and evidence that and not just say it. Because this stock pusher, taker community is full of it, folks. And I've heard it all, and so have you. Enough is enough. This is your money. We got enough overhead in Canada to deal with. And let me tell you, we're not for sale, but the Canadian economy is going to get a little tight for the next 3 to 5 years, in my view. And as a final disclosure, Michael McCloskey, on occasion, may pay an incentive to people like me if you follow my referral. It's very small. It's a tiny, tiny token of respect. It's not huge money. It's not a trailing fee, so I don't get ongoing commissions. If you're in it for the long haul with Michael McCloskey and Greenskeeper, it's just a little thank you note that I get with a little tiny thing. And all I'm going to do with that, Michael, is roll it back into my grandchildren's RESP, just so you know. I'm never going to cash the check.
You're a client, Tim, and I think that speaks volume. Listen, I think you're giving people really good advice. The idea of holding a low cost S&P 500 like the VU Vanguard has terrific funds.
Yeah.
I think that's suitable for a lot of people as long as you have the investment time horizon. If people that you're dealing with at ROI Corp and selling their businesses, they've worked their entire career to create this practice. Now they're monetizing it. Now they got an issue, and that's why they're asking you for advice. What do I do with this million or these multiple millions of dollars?
Right.
Their life expectancy, even in their mid 60s, is going to be another 20 years. You're going to need income, but you're still going to be investing for a long time, and you should be invested. And I prefer equities, and whether it's the S&P 500, I prefer my money using a more conservative style that isn't as volatile and protects the downside. But both are legitimate. It just depends on the individual and their needs. So
Well, I
I
like the
just
half managed, half self-directed model. That's pretty much the way I've gone.
yeah.
And my self-directed portfolio is almost exclusively Vanguard. I could buy SPY, and there's a couple others out there that do the same thing. But that's just my way for now. So you don't have all of my assets. So all of my eggs are not in one basket. We've heard that all our life.
That's smart.
But I just don't think it's as complicated as we're making it to be. There are managed portfolios, and there are portfolio managers and portfolio structuring artists, which is what Michael is, to make it clear, and a fiduciary, and family money, invested alongside mine. I have a TFSA with your firm, which is mine. I have the RESP, which is for the grandkids and one of my children, my youngest. And I also have a non-registered account with you in one of my holding companies.
Yes.
So, I have multiple accounts because that's the structure that it has to be. I'm hopeful one day you'll get the final seal of approval that I can move my independent pension plan over to you. But I know that's a whole other regulatory burden, and the big companies can afford those fees because now you're subject to, what is it, the Financial Services Commission of Ontario and all of the regulatory aspects regarding pension plans. And my independent pension plan has the same regulations as the Ontario Teachers Pension Plan. Same form, same rules, same everything. And that's a distinct administrative burden. And I don't blame you at this stage in your portfolio. You're well advanced over most of the people in your industry, but one day maybe you'll be able to help me with that too. So folks, I'm Timothy Brown. I am the CEO of ROI Corporation. I sell dental practices, and my clientele is aging along with me, and they're asking me questions. Michael, final words for anybody that watched this far?
Yeah, I think the last thing I just thought of, Tim, is a lot of Canadian portfolios that I see, when a new client comes to me, I see how their money was invested historically. Um, People own too much of Canadian stocks, to be frank. I mean, Canada's like 3% of the world GDP, maybe 5% of world stock market capitalization.
Right.
I own two Canadian companies, but most of the great businesses are elsewhere in the world. A lot of them are in the US, some of them are in Europe. And I think a lot of Canadian advisors do their clients a disservice by focusing too much of the portfolio on Canada and being too concentrated. And then when you have a trade war like this, I mean, it just shows you how exposed portfolios can be. So I don't think it's unpatriotic to invest in companies that are based in the US, or you're protecting your family's wealth. Well, I'm a proud Canadian like you, but I'm not going to have 100% of my portfolio in Canada just because the bank I work for, has an interest in promoting Canadian stocks. So I think globally as an investor, regardless of where you're based. And other than that, just keep saving and investing, and over the long term, you tend to do quite well in equities.
Well, most of the people that I talk to here in Canada, we earn locally, but we can invest globally. And
Correct.
it's for you. This is for you and your church and your charity and your children and grandchildren and your retirement and the next trip you want to take. That's what it's all about. So be a little more responsible with our money and watch out for the stock pushers and the takers, folks. They've decimated some people's lives in retirement portfolios, and it's a shame. I'm Timothy Brown, CEO of ROI Corporation. Thanks to my good friend Michael McCloskey of Green
Thanks, Tim.
Assets Management. Greens Keeper, just like it sounds. There's an S in there. Greens Keeper. Lots of E's, lots of K's. Thanks for watching. Make it a strong day, everybody.
Thanks, Tim.